this is just an extraordinary conference, right? Conference full of rock stars. But actually, the moderator of the next panel is a real rock star. She's been a TV news anchor for pretty much most of the top TV channels in the US, when you think about her, CNBC, Bloomberg, Fox, etc. She's now leading business coverage for literally the most watched cable TV news channel in the USA. No pressure. But she still finds time to come here and share with us. She also tells me she likes, telling stories about communities. And I said, how are you enjoying St. Moritz? She said, well, it's like, I'm terrible at skiing, but I can kind of fake snowboarding, pretend to snowboard. I have no idea how you do that. But anyway, here to help us and to lead us across the slopes of the Grand Vision, please welcome Susan Lee.
Thank you. Thank you so much. Thank you. I can't believe you don't do television, right? This is just like a part-time gig for you. He's pretty fantastic, I have to say.
Thanks.
Hey guys, thank you so much for joining us today. And I love St. Moritz, so beautiful. And I really, really want to thank Niccolo and the CfC team for having me here. Such a curated, well-organized event. And I've done the World Economic Forum, and I've done the Milken, and I just feel like this is a much more intimate affair that I'm really enjoying. Now, I'm here in St. Moritz, so I think I got the better end of this bargain because I'm here to host, I would say, probably one of the easiest panels to moderate upcoming because these are superstars themselves, and frankly, Anthony Scaramucci is going to do most of the talking anyway, so we'll enjoy that. But let's introduce our panelists coming up here. So I'll start with Gautam Sharma, who's Brevan Howard's CEO of Digital, overseeing $38 billion, one of the world's largest hedge funds. And you yourself manage about $1 billion in digital assets. The man in the middle, thank you for dressing up for this, Anthony. No need for any introductions.
Try to come crypto today.
SkyBridge founder,
for Davos,
superstar.
Actually,
Anthony Scaramucci is with us. And then Christine Moy, who's just been hired as the head of Apollo's digital assets team, where they manage, this is one of the largest private equity groups in the world, over $500 billion in assets. So guys, this is the panel on the grand vision and overcoming the industry challenges. So obviously, as I mentioned, I just really want to get the elephant out of the room early and quick. So we'll talk about FTX, and then we'll move on to talk about the rest of the industry and how bullish you are heading into the rest of this year. So, Anthony, I have to start with you because last night at dinner, when I said you're on my panel, everybody had the same question. Is the government going to claw back that $45 million Sam Bankman-Fried gave you?
Well, first of all, the funniest thing that happened to me so far was the governmental official that was trying to speak English. I thought he was going to say FUX, because that's how I feel about it. It's sort of FUX. But here's what I would say. If you really understand bankruptcy law, and I did take a course in bankruptcy law when I was in law school, if you have a value transaction and the transaction has real value to it, it's almost impossible to claw it back. And one of the examples that's used is, let's say a bank robber robs a bank, and then they go to the diner shortly after the robbery and they buy breakfast and they use the stolen money to pay the waitress. Is there a right to claw back the money from the waitress? And so the legal precedent, which dates back probably 250 years, is no, there isn't, because there was value exchange, and of course, the waitress didn't know about the fraud. I think one of the things that happens in our society is that when people are victims of fraud, whether it was Madoff, Theranos, FTX, we have a tendency to blame victims. We look at people, you look at the list of luminaries that were invested in Theranos. How could those people be so stupid? Didn't they know better? There's a great documentary on Netflix right now about Madoff. I guess the only thing I didn't like about the documentary was the director felt that the people should have known that Madoff was a fraud. Now, I wasn't an investor in Madoff, but trust me, there were some very smart, sophisticated people that were. So I don't think that there'll be a clawback. My legal team at Simpson Thacher does not think that there'll be a clawback, and nor do I think there should be a clawback. Now, having said that, I've been very open about it. I'm happy to answer any question about it. I don't want to suck up all the time.
In the bubble.
But I lost $10 million in that FTT token, or $9.6 million to be exact. So even if there was let's say that I got this completely wrong from a legal perspective, and there was a clawback, well, they couldn't claw back the whole thing because they did purchase equity, and equity has volatility.
You could buy back your equity.
We're negotiating with them to buy back the equity. The interesting part about the equity is that there's no Sam was going to buy the whole business. Thankfully, I slowed that down and said, why don't you buy 30%? They offered me FTX stock. I said, well, I'm 59 now. He's 58 when I did the transaction. I said, Sam, this is my life's work in this thing. I need cash. And then he asked me to buy $10 million of the FTT token. I thought in the spirit of our partnership, that was an okay thing to do. So I did do that. The point that I'm making is he gave me cash. As my old boss, Lloyd Blankfein, always says to me, hey, the money came your way. Don't be overly defensive about it. Let's see what happens. But I think we'll be able to buy it back at a fraction of what he paid because there's no protections there from a minority perspective. There's no dividends out to FTX. He has no management control of the company. So it's really only worth something to me and my partners. Anybody that bought that thing would be sorely disappointed because of the way the structure is around it.
But you've been doing this for so long, and just one more question on this, and then we'll move on to Christine and Gautam and have their perspective on the FTX credibility hit. But you've been in this business for what, 40 years, something like that, on Wall Street?
35, less my 11-day fiasco in the White House, which we can talk about that too if you want. But
yeah, I was wondering about that because I was
thinking. Other than my White House stint, I've been on Wall Street for 35 years.
Now, I was thinking, 11 days in the White House, was that longer than how long it took to confirm Kevin McCarthy as Speaker of the House? So 15 rounds of voting there, 11 days in the White House. I'm trying to think.
Actually, if you're measuring time units in terms of Scaramucci's, which are 11 days, it took 6/10 of a Scaramucci to confirm McCarthy, but
yeah,
that's fine. But listen, these guys have lost their way because you just have to think about the Republican Party, which I'm still a member of. And I don't know if you guys are following this George Santos thing, but this guy literally lied about everything. So where were the Democrats on that? I don't know. But
he's Republican, I believe.
These politicians definitionally lie. Okay, we know that. But this is like colossal lying that's just out of control. But the GOP now is going to accept that. It just speaks to the cynicism that the world has about our politicians now, and I think it's bad for the country.
And also crypto billionaires, apparently, because speaking of lying and fraud, just to get back to the topic and the question, is that you've been doing this for 40 years. What did you learn from this FTX collapse? And believing in
let's say 35, so it makes me feel less old.
And believing in SBF.
Well, listen, it's important to talk about it because I don't want other people to be caught in the situation that I'm in or other investors. I think that I'm not really sure how much more due diligence I could have done. We looked through the books and records. He had a pristine data room. I sat in his trading floor 72 hours. We worked with his team. I built a personal relationship with Sam. I'm not going to revise history because of what happened, okay? For me, I lost some money. It certainly hurt my reputation. But the most painful part of it for me is the relationship. Somebody like that could literally be that diabolical and break your trust like that. I took him to the Middle East with me, and I had him meet with people that I had 20, 30-year relationships with. And, guys, it took 20 to 30 years to build those relationships. And so whatever you think of me, I'm a pretty straight-up guy, and I have pretty good relationships around the world. Why would you trash my firm and my relationships like that? What kind of reckless behavior is that? So to me, that's the thing that's most painful because why are we all here? We're here because of relationships. Yes, we all love money and we all want to make money, but I've gotten the most happiness out of my life relating to other people, and that was just such a violation of trust. And so I don't really know how you're going to learn from that because I'm an entrepreneur. I grew up in a blue-collar family. No way I could have gotten to where I am right now without taking risk, and I have fallen on my head a lot. I'm a high-profile person, so every time I fall on my head, it gets 5 times the media exposure of my successes. That's fine. But the point I'm making to you is I'm not changing. I'm going to make another stupid investment, and Susan Lee is going to question me about it 5 years from now. I'm going to say I got that wrong, okay? Because what I'm not going to do is have somebody like Sam recolorize my entire life, okay? I made a mistake by going into business with him. I own the mistake, but let's move on because as a good entrepreneur takes the millstone of regret off of their neck and puts it down beside them and goes forward. And I intend to do that. And I'm not really sure how much I can tell you I learned, because I expect to be making risk-based, risk-adjusted investments in the future.
And that's how
That
it
was
works.
a big violation of trust, guys. I'm just telling you, don't do that to people.
Yeah. Well, Christine, you've been in TradeFi, JP Morgan, 18 years, and you recently joined Apollo this year. Credibility issues.
Yeah, I've spent like the past few months pretty much mourning, what has happened and, the impact and future impact to the crypto industry. I've been in the crypto and blockchain space for about 7 years now, and so I've seen how hard it's been, and I've been there from the TradFi side. So I've seen how hard it's been to actually, kind of scrape together the credibility to actually become an institutional grade asset class. And I felt that in 2021 and 22, we were like right on the cusp, kind of like the tipping point of like, here we are, like crypto is finally here and embraced by, all of the banks and all of the so-called institutionals that were supposed to be there in 2017 and 18. And obviously, trying to do my part to lead the charge as well. And, I just felt like what happened, whilst it had nothing to really do with crypto and only to do with a person and human behavior, really, I think, shattered the credibility of the crypto industry. Or at least, for people that may have been going in the direction of getting comfortable, it may have slowed them down. And for those that were always skeptical, it gave them ammunition to say, I thought this was all, like nothing in the first place, and now I feel validated. And then also for me personally, it's been I've had to reflect on, how do I regard like the people in the industry? Anthony mentioned having a relationship with Sam, and he did have credibility in the space, and people did respect FTX and the business, and now it's almost like you feel like you have to question everything. But more significantly, at least for my part, and for my seat, building and leading Apollo Digital Assets, now I feel this partial responsibility, more so than before. I always felt it before from the TradFi side, but now almost this ownership of, really gonna have to work even harder now to build credibility, to build the value, build the real world use cases that people will find this technology and find this asset class credible again. And, instead of looking at all of the, so-called crypto celebrities and being they are holier than thou, actually being I actually have no idea what's going on there, but all I can do is rely on the work that I'm doing and that my team's doing to create the value for this technology.
But there will be deeper research in the future, more digging, I assume, to make sure that what you're investing in is real. The balance sheets are real. There are no backdoors for their own personal trading arms.
From Apollo's perspective, we always do that. We don't have exposure to FTX, and we've always had very strict principles around extreme diligence, extreme governance. And, so much, I feel fortunate, obviously, during, an ebullient time where people are racing to get deals done, where there's FOMO all over the place and people are chasing valuations, chasing deals, it's hard. But Apollo's always been known to be a contrarian, and in those times where it's been hard, which was, pretty much the earlier part of the year where, I first joined the team, there were opportunities, and there were many opportunities to get involved, but, we stayed principled on, governance and control matters, extreme diligence, and purchase price matters to us. You can't make money if everything's super expensive.
So you said no to FTX, is that correct, what I'm hearing?
Not going to comment, but we don't have any exposure.
Fair enough. Now, Gautam, I have to say, at dinner last night when I said you were on my panel, because you raised $750 million close to the end of last year. Not a great time for crypto. I think 120 of that came from Anthony, right? And SkyBridge?
Well, no, actually less than that, but he's so good at what he does.
How did
it's
you
now
raise the money?
worth 120. I think we gave him 100 million.
Look, I think if I just get that back, the reason why we actually started Brevan Howard Digital was because we have the history of Brevan Howard for 20 years, where we have served institutional investors, and we understand what they're looking for from the partners that they want to partner with in terms of allocating capital. And the things that we realized, which was a gap in the market, if you will, one was thorough risk management from an asset management perspective, and diversification. And not only in terms of how you allocate capital and diversify and risk manage that, but also how you build the infrastructure needed to run an asset management business in this space. I think there was a big gap there, and that made us believe that it's an opportunity for us to launch that and leverage on the back of all the experiences we have had in the traditional side. So I think that approach has resonated very, very strongly with institutional investors. In fact, many traditional consultants who do diligence on behalf of institutional investors have put us on their platform because they believe we have the right infrastructure in place. Of course, we are building parts of it as we go along, but I think our philosophy is that we want to be super conservative, but deliver the upside of the space in a very risk-managed way, and that's kind of helped us a lot in terms of raising money.
So $1 billion now in your digital assets,
managing
right?
$1 billion.
And you were only down, from what I understand, just a few percentage points in a slaughter, 80% down market.
That's right. It's a combination of risk management, our strategies, our flexibility of how we build the.
Can you be a little bit more specific? What's in that fund? Anything interesting? Any names?
Yeah, sure. Absolutely happy to share. Right? The way Brevan Our Digital is structured is that our thesis is that it's not obvious where the value creation will happen over time. So it's very important to have diversified opportunity set that you can be flexible to play around with and move your dollars depending on where you see the buck going, right? So the way we are structured is we have primarily 3 strategies. We have trading strategies, we have directional strategies, as well as we have VC. So beginning of the year, when our macro view, which is what we leverage a lot from BH side, was that this is going to be a difficult year from macro, and we are likely to see headwind in the crypto market. So we focused a lot on the non-directional trading side of things. So the capital allocation was there. As we come closer to the year end last year, we have started diverting towards directional side of the business as well as on the VC side, because we see where the valuations are on the liquid opportunities and also on the VC side are very attractive. So we have that flexibility, and we will maneuver our strategy to make sure we are managing the downside for the investors.
Be a little bit more specific. Any particular names? Because I'm hearing you, but I want to know, how do if I'm down 6% when everyone else is down 70, how did you do it that I couldn't?
Yeah, look, I think, first of all, we are a multi-manager platform.
Yeah.
So what we do is we hire portfolio managers who are specialists in what they do. And then we take off the allocation question from them at the CIO level, at the CEO level. So we have to take those bigger decisions, whether we believe it's the right time to buy tokens or whether it's believe it's not, and hence we should give more capital to someone who can arb out opportunities or do trades between 2 exchanges where there's a clear arbitrage opportunity or business opportunity.
Okay, so we're looking forward, right, Anthony, 2023. Hopefully it won't be as bad as 2022. It can only go up from here. But is there anything that you're focusing on, that you have belief and bullishness?
Well, first of all, we don't know that. Obviously, you can go back through the markets. You can get 2 years of really bad market activity.
3 out of 4 years,
so
the stock markets go up after it's had a down year.
I do like the dynamics of what we're seeing in the month of January. There seems like the selling that took place in December, people are sort of reestablishing positions. I love the space. I'm committed to the space, and we'll be launching a fund probably by the end of the first quarter, which I think, we've got 2 anchor tenants that are going to come in with us on the fund. And it'll be a collection of Web3 situations and some what we think are distressed layer 1 technologies that we like a lot. And when I say distressed, it's just the prices are down.
Any names?
I'm not going to give names right at this second, but I've been very public on things like Algorand, which I think is a wonderful technology. If you really understand the technology of what they built, most CTOs of large Fortune 500 companies would look at that and say, okay, that is fairly unbreakable. I'm not going to lose my job if we build on that chain. Problem for Algorand and others is that they got crushed in this business environment. But I do think that once people discover that layer 1, I think that layer 1 is going to have some exponential growth. So that's one specifically, but I've talked about that before. There are others.
All right, Algorand.
There are others. Well, yeah. I mean, listen. if you do the homework, I think what happens sometimes, and Christine mentioned this, there's like a lot of FOMO, and people are not doing the homework, and they're racing into things.
Yep.
I did the homework though. And Christine may have passed on it, and we could talk about why she did. She doesn't want to comment on it, but I can tell you why I accepted the money from Sam.
Sure.
Okay? I accepted the money from Sam because I thought he was the second largest cryptocurrency exchange in the world. He had 12.5% of the volume. I spent 72 hours on his trading desk. I went through his data room. I built a personal relationship with his father, Professor Joe Bankman, a tenured professor from the Stanford Law School. I had a relationship with some of the key principals there. Some of them, frankly, didn't know about what he was doing. To commit a crime like that, you got to do it in a very small group of people, because there's always a person of conscience that will blow you up. If you look at Madoff, it's 3 or 4 people. If you look at what Sam did, it's 3 or 4 people. So, and again, a good fraud can get very sophisticated people. Now, people get mad at me. I sometimes mention the names of people that were investors of his, and then they call me up and they yell at me. So I won't mention them, but just go look them up.
Tom Brady, maybe?
There's a ton of people, not really him though, I'm talking about very sophisticated venture capitalists that made the investment. And so I think Christine's right. There was FOMO, okay? And now there is nuclear waste and people are running from it, and there's a lot of I told you so's, and there's a lot of schadenfreude. People are like super happy. Oh, wow, you got burnt in the space and I didn't. I'm super happy about that. That's human nature, okay? But when all of that blows away and you see the building that's going on things like Algorand or other technologies, when you see the building that's going on, you're like, okay, wait a minute, capital will flow into that. One last point, why? It is just better. It is a better system, okay? There were people with horses and carriages. They said, okay, that horseless carriage, that's a fad. Bill Gates, he said the internet was a fad. Now, he's a brilliant guy. He pivoted, went into the internet. My point is, 14 years into aviation, the Wright brothers, 1903, 1917, there were people saying, there'll be no commercial application for aviation. 14 years into it. Okay, so you have to think exponentially. The problem is you're sitting in a 100,000-year-old piece of machinery. This body hasn't evolved in 100,000 years, but your phone went from iPhone 1 to iPhone 14 in 15 years. So you're thinking linearly, that's your survival mechanism, but the world is moving exponentially. So I don't want to miss it. I don't want my clients to miss it. And very, very smart people will invest alongside of the 3 of us.
Yeah,
because of the vision.
I totally agree with Anthony. Right now is like a time where, I talked about the loss of credibility. But for those of us that have conviction in the space, in the technology, in the ecosystem, and the talent, it's an incredible time to enter, right? Because, first of all of the opportunists, a lot of the noise has been shaken away. The people who remain are the people who are really serious about building something of value. So the quality of the founders is, easier. Like it's easier to surface them from the general opportunists that just showed up for the party. And then for someone like Apollo that is just starting to invest in the space, it's an incredible entry point. I mentioned how purchase price really matters to us, and to be honest, in a bull market, it would have been pretty difficult for us to, find really great deals, given how principled we are about what our entry price is. But now, these top quality founders, with the valuations being honestly more realistic.
Any themes in particular? Layer 1s, Web3?
Yeah, I mean, driving real value, which has really been my, blockchain life's work anyway for the past 6 years. It's just taken some time. We're not quite sure of the timescale. But for example, the Apollo digital asset strategy is to build and invest, and to basically create a flywheel where, by being a hands-on user of the technology, by actually incubating new products and businesses with these blockchain technologies, that will help us surface better, kind of ideas around what's missing in the tech stack or the value chain, which then will help us surface, where we should be investing and where we should be deploying capital. And then, furthermore, being the first customer to our portfolio companies, or lending our scale, lending our product and markets expertise. I mean, for example, the key use cases in DeFi in the past couple of years have been all about yield and credit. Apollo has a $400 billion credit book. There's across all different types of credit and fixed income products. So there's really nothing from a credit perspective that our team has not seen. from a market cycle perspective, from a product perspective, and from a risk management perspective. And that's not the type of experience that your typical Web3 founder may have, right? Now, they have like the technology aspect of it, and it's fantastic. But in terms of the way things are priced, like relative to like the broader market, some of it doesn't make any sense. The risk management obviously needs work. And so when you pair like the Apollo markets expertise with the technology expertise of some of these like amazing Web3 founders, we actually build something where we can use, like as an example, like, a DeFi protocol where Apollo like will actually deploy credit through. Like that's a powerful combination, and everyone wins. Like from an Apollo asset manager point of view, we figure out how to scale our business, how to basically leverage new technology to be a leader in the space, and then the company that we've invested in, that we're partnering with, learns from this and actually we're able to build like more credibility and more scale from that experience.
So since you joined in April, do you have any names of companies or any themes of companies that you're very optimistic on?
I think that like the key themes and areas that we're focused on are, tokenization of private and alternative assets. So, for example, have already tokenized private funds with Figure and on the Provenance blockchain. I think the business driver to that is, due to secular shifts, like there's actually just a broad appetite for alternative assets, but it's actually not that accessible to a broader non-institutional investor base. But to be honest, like this next generation of investors that is crypto native is actually super keen on alt. It's just that the crypto asset class is sort of their first alt, but a lot of VC investing and a lot of real estate investing. And I think that being able to tokenize private funds is an interesting way to be the first proper alternative asset in their wallet, as an example. And then obviously like very cool attributes behind that around enabling, broader secondary or, leverage. Although, to be honest, that's not just technology. That also is like actual product structure. But as the maker of these products, like, as we get investor feedback or advisor feedback, like, we can shift the way we make product. Like we can, like it enables us to be,
nimble in these markets, right?
Exactly.
So
exactly, to have the full suite and capabilities. As I mentioned, the other category that I'm super focused on is DeFi, but not like, specifically any type of like tradable DeFi, but specifically in the context of credit and yield. Think that's really interesting. And then, I think that there's also another category around what you might be able to do in terms of like putting together the automation that smart contracts can enable, and then also data, like how you interpret like, what people want and how you might put together portfolios of assets and things like that.
Okay.
So, yeah.
So one thing I wanted to ask you guys, at 8:30 a.m. Eastern time, I'll be looking at my phone, thinking, what are the inflation numbers later on tonight? And what does that mean for the Federal Reserve? And that's one aspect I brought up with Gautam about how correlated crypto is to the broader markets. I thought it was supposed to be decoupled and decentralized, but I feel that crypto kind of trades along with the broader markets.
Yeah, I think what's interesting is that, in a way, the broader market actually was a blessing in disguise for crypto. If you think of between 2020 and 2021, a lot of DeFi protocols got the TVLs up to $150 billion. That wouldn't have been possible if there was no liquidity in the market.
And free money,
there was
stimulus
free money
available.
So those experiments were proven at scale.
Right.
I think that was a blessing in disguise.
Okay, so now we're in a tightening cycle, right? We're expecting the tightest cycle we've seen since the 1980s, when Scaramucci was around, and
we all
and the
born.
Volcker days. But so in 2023, I mean, how much is that factoring into your investments?
Yeah, it's absolutely factoring into our investments. In fact, if you look at one of the reasons we performed the way we performed last year was driven by significant learning we have had running macro and how we positioned ourselves for that. I think going forward also, we are positioning carefully in terms of getting exposure directly to the market or taking directional exposure. Look, macro headwinds are still there. Tech has gotten crushed. Crypto has been no exception, and I wouldn't even expect that to happen. But I do think a lot of fundamental work is going on. Projects are getting built. New infrastructure is getting built. As and when the monetary policy becomes manageable. I think some of these opportunities will come back again. Maybe it's Q2, Q3 this year, or maybe later. It's to be seen.
Anthony, recession?
So I sort of feel like we're in a recession. It really, there are lies and there are damn lies and statistics. So the government's going to make it like we're not in a recession, but I think middle and lower middle class people feel that we are. But since you brought up the fact that I've been around in the business since the 1980s, let me just say this, and everybody knows this, but it's worth repeating. There are no new stories. They're all the same stories that get remixed, okay? So it's like if John Merriweather, who blew up long-term capital in 1998, got married to Bernie Madoff and they made a baby, Sam Bankman-Fried. Okay, so they took the leverage plus the fraud, and there you go. Okay, so but there are no new stories. Okay, so let's look at it for exactly what it is, and then you have to take a step back and you have to ask yourself the following question: am I in or am I out? I know contemporaries of mine that swore off tech stocks. 2000 was a debacle. I don't know where it bottomed, but I think Amazon went from like 116 to 6, some number like that. If you swore off tech in 2000, you missed 22 years of probably the best investment opportunity in U.S. or perhaps global economic history. So I don't want people to do that. This has been a terrible period of time, terrible environment. Go look through any type of technological advancement or change and look at what happens. You get this volatility, you get fraud, you get scam artists like you did in the 1890s in the rail system, and you just have to make a decision. Are you in or are you out? I'm in, and I'm going to be here. And since you made fun of me about my age, I'm going to try to outlive you, Susan. Try to outlive you.
And resilience is really the key here.
Yeah.
I think for our part, yes, of course, watching the broader macroeconomic, scenario play out and adjusting accordingly. But to be honest, if you have high conviction in the technology and in the space, and you're finding, you're not speculating and you're just focused on where are the real value drivers. It's a great time to build. I mean, I built through the last crypto winter, where, it was to the point where someone, I remember really knee deep into it, super excited about my project. And someone said, so this blockchain crypto stuff, it's been canceled, right? Do you need a job? Do you want to get into fintech? That was how bad it was, right? During the last winter, that people would have just written off blockchain and crypto and said, that's done. And maybe now you need to shift your career. And I remember at the time reflecting have I made the right choice? But I have so much conviction. I have so much excitement about the project that I want to deliver, which ended up being the intraday repo product that at JP Morgan that has tokenized over $400 billion of treasuries in US dollars. If I was shaken, that never would have happened. But now that so I expect in the coming cycle, it will be difficult. So for our founders, we're definitely advising to be very careful and cautious about spending and being frugal and trying to max value. But to be honest, everybody should be doing that anyway, all the time, anyway, right? And so I think we're gonna find higher quality products and less noise is better. And on the end of it, we will see great outcomes.
Okay. Final predictions then, because we're running out of time. And, in Switzerland, they're very on time here, so we have to get to it. Gautam, for predictions for 2023, winners, losers.
So I think stable coins are definitely going to be big winners. They will see stable coins.
Okay.
They'll see big use cases in the real world. So far, stable coins have powered the crypto economy. The second thing I would say is NFTs will get mainstream. Brands will adopt NFTs and use that as a way to, attract.
But volumes are down
generation.
90% for NFT trading.
It starts like that,
yeah.
But then real-world use cases start coming in. So if you look at all the brands, look at Nike, what they have done. So I am pretty hopeful on NFTs as a use case, and gaming certainly is another opportunity that we are super bullish on.
Okay, Anthony.
I would just say there's probably more sloppiness ahead, but I think the back half of the year for growth assets and cryptocurrencies is going to surprise people to the upside.
The back half. Okay, so do you want to be specific on which cryptocurrency?
I think we're, I would say it's general. Unfortunately, I think it's moving in a macro sense. So if you saw Bitcoins rise recently and you saw all of these other coins go up, and they're more volatile than Bitcoin, so they're going up at a greater pace. But I do think there's some sloppiness. I think there'll probably be near-term sloppiness because I don't think the Fed really knows directionally where they're going. I mean, they're going to look at the data today and other pieces of data, and they're going to be very cautious because they got the transitory inflation decision wrong, and so they're probably going to overtip to raise rates more than all of us would like, or more than is what's necessary. So
do you think it's going to get to 6%? Because Jamie Dimon says there's a 50% probability we'll get to 6.
Well, he's a lot smarter than me, but I would say to you that it likely won't get to that number because there's a lot of other things that are going on. You know, remember, they've got to raise the COLA for Social Security every time they have this level of inflation, and it's very expensive for the government. And if you're going to have 6-8% rates and you blend that out over $32 trillion, you are putting the government in a situation that's going to be very difficult for the government.
So if you're bullish on crypto in the back half of this year, does that mean you're pricing in cuts by the last 6 months?
I do think the back half of the year we'll be cutting rates again, yes.
Wow. Okay, Christine, your perspective. Winners, losers, 2023.
Yeah, I mean, I think that we're kind of reaching the phase where, you know, there are a lot of the technological fundamentals in place. And perhaps like the narrative shifts less about like the actual technology, whether or not it's blockchain or not, whether it's like, you know, crypto or not, and actually, you know, it subsumes into the background and actually just seeing boring use cases that are actually like really effective and value driving that may have blockchain in it, but no one really needs to talk about anymore. Like, get into that, I think was...
Those are the winners or those are the losers?
That would be the winners. That would be like a winning outcome.
See?
Right? Like actual use of like, you know, technology as opposed to just getting hypey about like the possibilities.
You're not a FOMO trader. I like that. She's cool as a cucumber. And I told you that this was going to be easy and fantastic because of these panelists. So thank you again for joining us, and thank these wonderful panelists, Gautam, Anthony, Christine, for joining us today.
If you could just stay there just for a moment, please. Thank you for your amazing candor, terrific insight. It's exactly what this audience wants. But also, could you please put a huge thank you to Susan for being a fantastic moderator? Yeah?
Thank you.
Thank you. Can I have a slide, please?